In terms of the big names we're watching today, a lot of those stocks that we saw pummeled yesterday in the sell-off, seeing a bit of a comeback today. Let's start with Boeing. That is up more than 8%. American Airlines up more than 15%, despite the company saying it expects revenue in this current quarter to decline 90%. We're also seeing the cruise liners up today, Norwegian and Carnival getting a healthy pop today among the top movers. Also worth noting, a rebound in treasury yields today after significant drops yesterday. The yield on the 10-year climbing back, perhaps signaling a bit of a risk appetite returning to the markets today. Let's bring in our first guest for the hour. We've got Dr. Barton. He is a chief technical strategist for Money Map Press. We've also got Yahoo Finance's Brian Chung here for the hour. And Dr., let's start with you because we've seen huge swings over the last several days today. Some saying, look, part of this is what we heard from Jay Powell, maybe putting some cold water on all the optimism we saw in the markets, but also we've seen some big spikes in coronavirus cases in other states. So what do you attribute the volatility to?
Well, I hear loudly and clearly that when Chair Powell made his comments on Wednesday that people thought that might be retrospectively looking from Thursday back. But really, after that happened, we got just the teeniest of sell-offs for the next couple of hours after those comments. I believe it was when some of that more negative data on the hospitalizations in particular in 12 states reaching their the highest levels of the crisis. So I think there was some of that balance of that coming in that drove the markets down. But I think we're seeing that rebalance again today. It's all about stimulus, stimulus, stimulus. Even when we get a punch in the nose like the markets did yesterday, now rising back again.
So it's all about the stimulus, and yet we haven't seen significant moves on that front, at least in Washington. There's still a big divide on how much stimulus should be provided, where the target should be. So having said that, should we expect further pullback as a result?
Well, I think that, we don't need to get additional stimulus every other day for the markets to keep rising because of the existing stimulus. We already have the Fed saying, look, we're going to backstop high yield corporate debt. We're going to buy high yield exchange traded funds. They've put a safety net under those portions of the market. With that happening, along with the money that's going to continue to flow, it's flowed into pocketbooks. It's flowed from consumers. There have been some spending, a little bit of spending from the levels that we were seeing before. All of that's going to continue to bubble up. And we're going to keep getting headline risk from China, from the coronavirus, that's going to keep this market really volatile like we're seeing right now. But I have to say that it seems that for the intermediate term, that stimulus is still winning, and I have an upward bias for the market going from here.
Dr., what do you make of all the talk of these retail investors getting in on the market? Those who are on Robinhood, potentially looking for some stocks like the airline stocks, even Hertz. I mean, are we over-exaggerating the impact from those traders jumping in on the market? How should we be viewing that?
Yeah, I don't think it's over-exaggerated. I think they are having an impact on those names, and I think then savvy institutional traders are following, just saying, "Hey, if they're going to be in there, pitching, we can do it too." I'll tell you, Akiko, I heard my favorite saying. We know for a long time there's an old Wall Street saying, "Sell in May and go away." I heard a friend say last night for the Robinhood traders, it's buy in June, retire by noon. And I think it really is having an impact, and it's keeping me shorting things like the airlines when they take a 15% pop in one day like today.
Buy in June and go away at noon. That's an interesting one, a new one, I guess. Let's talk about some of those stocks, though, that we have seen these retail investors get into. One that's being talked about a lot today is Hertz, asking a bankruptcy judge to sell $1 billion worth of stock. I mean, I think I know what your answer is, but number one, would you buy this stock? And, what do you think the play is here?
Yeah, I'm pretty sure that that our Robin Hood friends are not going to outduel Carl Icahn in the long run. He stayed by stock Hertz's stock for a long time, but I don't think that is the play. And I think floating a billion new shares, you know, I can't see a billion new shares of dilution in Hertz of where it is already is going to do any good. And I think they're going to be much like the rest of the travel industry, that we've got some hope that reopening is going to help. But I think it's going to come, but I think it's going to take a lot longer than we believe for all of those stocks to see revenue, earnings, and cash recovery. So I'm not interested at all right here, unless to short on a strong pop like we're seeing today.
So having said that, DR, how have you allocated your position? I mean, are you shifting things up right now? It seemed like the last few days we saw rotation out of these reopening trades. We're seeing some of the airlines, the travel stocks bouncing back today. Where do you stand on positioning for some of those names?
Yeah, well, let's look. There's two distinctly different time frames here. One, I'm talking about shorting the airlines is a trade, is a short-term trade, not a long-term nest egg retirement money kind of positioning for the long term. I think with that kind of money, with that nest egg kind of money, you've got to buy quality names whenever you get a pullback. We had a big move down yesterday, and actually for a few days in a lot of the big mega techs, the Amazons, the Microsofts et al., you know, buying those on pullbacks is still very valid, because going in the longer term, when we look out beyond coronavirus, beyond the third and fourth quarters, they're still going to be the winners. They're still making double-digit revenue gains during the crisis. After the crisis, they're going to continue to be strong. So positioning for those things for the long term versus trading in and out of these fancy sectors in the short term, these value plays that people are running up for a few days, that's kind of a very different trade, one that I really like to do, but I really want to position in a different way for that longer term with those quality names.
Yeah, when in doubt, go back to tech. That seems to have been sort of the ongoing theme over the last several months, or you could argue much longer than that. DR Barton, Chief Technical Strategist for Money Map Press. Good to talk to you.
Thanks for having me.